This lesson is on revenue budgets. You should open your new client handbook to page 23 to go over revenue budgets. The menu path to get to the revenue budget area is on accounting, maintenance, revenue budgets. So I'll go there now. Accounting, maintenance. And alphabetically, revenue budgets at the bottom of the list. And it'll open up the revenue budgets area. Here you can add revenue budgets for funds that don't have a budget for the year, record supplemental changes, or display the budgets you've already recorded on your list. As you can see, I've already gotten started, and I've recorded a revenue budget for the general fund. But let's flip back to our handbook and look at the overview. Our definition. A revenue budget is an estimate of an entity's anticipated revenue from two sources, taxes and other sources during the year. The total per fund for each revenue budget, so per fund for each revenue budget, should equal the tax revenue and other sources on the amended certificate of estimated resources. And here's the calculation. Taxes plus other sources equals the fund total on the revenue budget. Well, before we take a look at those two things, the budget and UAN and a sample of amended certificate, I want to note one thing about those of you who are converting. It applies to this lesson and to the lesson for appropriation budgets. We are going to assume that the Buckeye Township, the sample township we're dealing with now, is a current UAN customer. So in other words, they're not converting. They've been on, the year now is 2011, and we're assuming it's in January of 2011, and we're going to assume that they were on UAN for part of or all of 2010. And the reason we're going to do that is because for the budget purposes, when you do your conversion, there's some, depending on the conversion type that you pick, which we'll get to when we go over the conversion handbook, that could affect how you enter your revenue and appropriation budgets. So we really don't want to go that route right now. We want to give you a basic overview of how the screen works and how you enter in your revenue appropriation budgets in a typical year, and that's a good thing to learn first. And then you can kind of back up a little bit at the end of class when we talk about the conversion and look at maybe some of the slight differences in how you would enter, the amounts that you would enter when you first do your revenue budget and appropriation budgets. All right, so again, starting off, this is assuming this township has been on UAN for a while, and now we're in January 2011, and we're wanting to enter our revenue budgets. So I'll come back to the highlights, but let's take a look at that. It says it should equal the taxes plus other sources columns on our amended certificate. So here's a sample of amended certificate for our township, and obviously a limited abbreviated sample. We've just got the road, general fund, and road and bridge. But for our lesson purposes, it suits our purposes. It's a typical amended certificate. Yours might be different than this, slightly different than this, but this is typically what we see as examples from counties here at UAN. And typically what you have is the taxes and the other sources and a total for your entire fund. Okay. And so in UAN, when you input the revenue budget, your total for each account code should equal the sum of these two. So 120 plus 45,000 would be 165,000. Notice the amended certificate also includes 95,000, and that's what, when this entity closed 2010, as December 31st, 2010, they had $95,000 cash balance. So that's cash And it was, well, they had an unencumbered balance of $95,000. It's possible that they had purchase orders, that unclosed purchase orders or blank certificates or unpaid withholdings, which encumbered a portion. Maybe they had $105,000 in cash in the general fund, but they had encumbrances of $10,000. Well, that would give them an unencumbered balance of $95,000. So that's what the amended certificate is referring to here. That $95,000 that's unencumbered as of January 1st, 2011, or the beginning of the year, plus your taxes and other sources, should equal your total available for appropriations. All right, so if we go to our software and we look at the example that I've already entered in the general fund, well, we can kind of see a preview of that here. Your current year final budget is $165,000. That $120 plus $45,000, taxes and other sources. And our total available for appropriation is $260,000. Well, if you add in the cash, unencumbered cash balance at the beginning of the year, that's $95,000. That would equal $260,000. So we can see that there. We could display this and see it in a little bit more detail. So if I select my fund, I only have one, and select the display button, I can see what I entered prior to class for the general fund. Again, just a sample list of account codes. I threw some account codes out there and plugged in some budget amounts. So here we've got our current year final budget, no supplemental changes for the general fund, and it comes out to the total, basically totaling up this column, of $165,000. That's our taxes plus other sources. If you add in what's not seen here, that $95,000, our January 1st unencumbered fund cash balance, well, that comes out to $260,000 resources available appropriation. And this amount would be the current year final, just refers to if we had any changes when we go to make edits. So it's zero, but that's the amount, corresponds to amounts that we're talking about on our amended certificate of estimated resources. 260,000 is work. The 95,000 is worked in there. So that's what it should look like. Doesn't always look that way. Sometimes you have to make corrections. So we'll take a look at that. We're going to do a sample of this for the Road and Bridge Fund. We can see our amounts here on the amended certificate, and we're going to use far less account codes. As you saw here with the general fund, you don't just plug into one line unless you only have one account code for a particular fund, but you would break down that taxes and other sources. Amended certificates is just summarized into those two sources of revenue, but in the per year chart of accounts, you'll want to determine what revenue accounts source of revenues you should use. So you look up that township chart of accounts, look at your revenue codes, and you might have to translate that from your old accounting system. So for those of you converting, you might have to we're going to have worksheets where you go through and you set up your old account revenue numbers with the new ones based on your chart of accounts. So again, jumping ahead there, our entity already has current existing revenue accounts. Those would have carried over from a previous year. You don't have to set up the account codes every year, but you do have to set up your current year budget every year. If you have any new account codes, then you would set those up under your revenue accounts. So I'm going to close this screen, and we'll turn back to our book on page 24. Our exercise calls for adding a revenue budget for road and bridge. And to add anything new, you click on the Add button in the area that you're in. So click on Add. And it gives us a note, revenue budgets can be entered only once per fund. Any subsequent changes must be made by supplementals using the supplemental budget button. So we'll get to that in exercise 2. Go click OK. And we see we've got a screen here with several columns. At the top of the screen, we have a required field. We have to pick the fund. Excuse me. Well, notice the general fund's not available, and that's because I already saved the budget for the general fund, so we can't add it twice. So here I'll select the Road and Bridge Fund, and I've got a very simplified list of account codes. We're going to use transfers in later for a different exercise, so I added that, but for right now we essentially have two account codes for Road and Bridge in our simplified example here. We've got the revenue account, the account name, no changes here as you can see. The current final budget, well, we haven't said anything yet, so it's 0. The budget balance, well, we haven't received anything in, so we don't have any balance yet comparing our budget versus our revenue, so that's 0. And then we have a data entry field, the budget amount, the full year amount that we expect to receive in each particular, in reference to each source of revenue, referring to these account codes. So in my simplified example, we've got property taxes and other sources, other state receipts. All right, so I'm going to enter in the $58,000 in exercise number 1. I enter that in, I press the Enter key, and it brings me to the next field, which is other receipts. And so notice that it filled in this revised current year budget. It went from 0 to an actual amount, and then our revised balance is the same because we don't have any receipts. That we haven't entered any receipts yet. So I'm going to enter 1,000 for other state receipts and leave this one 0. And so now we've got a current year final revenue budget, that's the total here, of $59,000, and then the resources available for appropriation if we add in $41,000 of our unencumbered balance for Road and Bridge, that comes to $100,000. Now I need to set an effective date, and we're going to assume that this is just as of January 1st. Well, I actually have to back. Here's where our problem comes in. I'm recording this as of August 31st. So another little side note here, I've got to backdate everything back to January just to use for our examples. So obviously you wouldn't necessarily do this in a normal everyday year. You're not going to be entering your revenue budget in August, but for our purposes we've got to break things. So I'm going to set this as of January 1st, 2011. Obviously, you would do this on a different date in real life, and if you're converting, it all depends on your conversion method. But our effective date for the revenue budget is January 1st, 2011 in our example. So we'll save Road and Bridge. Gives us a little confirmation at the bottom of the screen, and we can go on to enter our other funds at that time. But I'll just use that example, and I'll close the screen. And so now we can see the current year final budget is listed here. The revenue budget is listed. You may, if you're astute, you may have noticed that I entered in the wrong amount. But I'm going to pretend I haven't noticed that. Made it very simple so you could see that if we look at our amended certificate, that that was just our taxes. I entered $58,000 when it should have been $59,000 for taxes. But let's, so our total really should be $60,000 plus $41,000 equals $101,000 available for appropriation. That's not what we have here. Here we have only $100,000 available for appropriations because that $59,000 is wrong. Well, let's say we didn't have such a simplified example here, and it didn't stand out so easily. How would you determine? What would be a good way to check that? And that's really kind of jumping to our checklist here, which is a good one of our checklists. We're not going to go over 2 and 3, but if you look here under number 1, our checklist on page 25. It says, does the total revenue budget for each fund equal the amount on the amended certificate of estimated resources from your county auditor? Well, we saw that didn't. But you want to check this. A good report to check this for all of your funds once you get them all entered in is the resources available for appropriation report. So compare the amended certificate, the sum of the taxes and other sources columns for each fund, to the estimated revenue column on this report, resources available. So here you've got the menu path for that. Again, we'll go over reports in detail later in class. I'm going to kind of jump there. You can ignore how I get there and how I use the screen just to take a look. And actually, there's a little message about that right here under display. It says to refer to the resource available for appropriation report, and it gives you the menu path right there. So let's take a look at it. Well, the menu path is under accounting reports and statements, budgetary, but I actually have a shortcut here to budgetary reports. So I can use that related screens shortcut, click on budgetary reports, and it opens up that area, the budgetary reports area. There's only 2 reports there, and the first one's resources available for appropriation. So I'll just select general and the road and bridge, and I'll display that on the screen. And I'll zoom in a little bit so we can see. Well, there's a few other complications here, but this has to do with how it, in UEN, how it backs out your encumbrances from your fund balance as of January 1st, in this case 2010. So this is the prior year, the end of the year fund balance of the prior year. So we're in 2011, and our 2010 ending fund balance, for, as we saw with the general fund, it's really easy to say that was $95,000. That's our beginning of the year, January 1st balance. Apparently there are no encumbrances or no special situations here with non-expendable balances. So that $95,000 ends up being, if I come back to my amended certificate, that ends up being my unencumbered balance as of January 1st for $95,000. And my total taxes and other sources, as we saw before, is $165,000. Well, that matches my estimated revenue. That's what I put in for my revenue budget for the general fund. And so my total resources is $260,000. However, if I look at my amended certificate for the Road and Bridge Fund, I can see my total available for appropriations is $101,000 on the amended certificate, but I don't have that. I haven't entered that amount properly in UEN because I see my total resources is $100,000 here. Well, again, it's simplified on mine because I only have 2 account codes, but we can look here and see, well, where did that problem occur? Is it a problem with my beginning balance? Do I have encumbrances? Or something wrong with my carryover encumbrances for the year? And some of these other, I'll get into detail of all these other possibilities, like non-expendable balances and so forth. But no, it doesn't seem to be a problem. I don't have any here. If I look at my unencumbered balance on my amended certificate, it's $41,000, and that indeed, because these columns are all 0 here, that's actually matches what I have in UAN, which is $41,000 unencumbered balance. So the problem must be here with my estimated revenue at $59,000. So that gives me, so I'm looking at, maybe I got 10 funds, and I find a few problems here. So this is an excellent report for your beginning of the year budget to look at and see, did I make any errors when entering my revenue budget, and compare them and then investigate. Well, once I find I have a problem, then I can use one of my big 6 reports, the revenue status. And here it says the revenue budget's amount should equal for the final budget amount for each account code when you total that up. So if I go to my revenue status, one of our big 6 reports, I can close this report area here. It's not here, but remember at the beginning of the book we have the menu path for that. We can also get to it here under Revenue Reports, but I'll just show you. It's under Accounting, Reports, and Statements. If I go down to Revenue Reports, I find the first report there is Revenue Status, and I can just select, I'll just select my, if you remember one of my tricks from the overview, I'll select the last account code in that fund and select the Control Up U key. That selects all of my account codes, and I'll just display those. Normally you would select all of them, but we're using a sample here. So, well, I can see everything looks good in my general fund. Here are all of my account codes, and we already saw that that matches up the 165 for taxes and other sources in the final, not this column, this final budget amount. Here we can see receipts. We don't have any receipts yet, so our budget balance is identical to our final budget, but that'll change as time goes on. We enter receipts. But here's my road and bridge fund, okay? And I can see here that that $59,000 doesn't match up for the fund, the road and bridge fund, to what I should have on my managed certificate, which is, which is $60,000, and I can identify where the problem is. It's right here in the general property tax of $58,000. So now I see I entered that in wrong. What do I do about it? Well, it said that I could only enter this once per fund. So I go back to my fund. I see, well, I can't add it again. The road and bridge is not there, so I've got a problem. Well, here's where the Supplemental button comes in. With the Supplemental button, you can make changes to your revenue budgets for two different reasons. One is at the beginning of the year when you enter your revenue accounts, and you do just as I said, you enter them in, your budget amounts, and then you go to check your reports to see if you have any problem. If you found that you have made a key-in error or you made an omission, you forgot an account code to enter an account code amount, you can make corrections using the Supplemental button. So we'll do that. That's one application of this Supplemental account button here. So I click on Supplemental, and I can see that here's the amounts I entered before. But now and all the column headings are identical as before, except for this data entry field. It now says Supplemental plus or minus. Well, let's say if this was actually supposed to be my final budget amount, and we can see where our amounts are wrong here. It's the $100,000 and the $59,000. Well, that's wrong. It doesn't match our amended certificate. So I can make changes here by entering either a positive or a minus amount. Well, maybe to correct the problem, we'll go with our exercise number 2. I need to correct this by entering in $1,000, a positive amount. When I press the Enter key, notice that my revised final budget is now $59,000, and now my amounts are updated. It went from $59,000 to $60,000, and now my total amount available for appropriation is correct. If I look at my amended certificate, it matches up. Let's say I made an error in the other direction. I could type in minus, say, 2,000, and it would reduce my budget, revised budget balance to, or my revised final budget to 56,000. So it's a plus or a minus, depending on what error I made. Or maybe I should have put in something for a higher amount in a field that I didn't have an account code for. I could enter that amount in if there was an omission. But in this case, it's a positive 1,000. That's my only correction. I need to put in an effective date. Well, that'll be the same date as my original budget because we're just correcting a transcription error, a key-in error. And note from your book, this is a good reminder. Back to your book here. Key and errors or omissions to the original budget can be corrected by entering the supplemental revenue a supplemental revenue budget and selecting the Apply as Correction checkbox. If you fill in this checkbox, your changes will not be recorded as a supplemental change. We'll explain that in a moment. But what you need to do when you enter just a key and error, your actual budget should have been $59,000 for the taxes, but in other sources, or taxes and other sources, should be a total of 60. You just keyed it in wrong. You fill in this checkbox. It gives you a little message saying the supplemental budget you have entered will be applied to the fund's original budgets and will not reflect the supplemental budgets on display or on your budgetary reports. This should be used only to correct transcription errors or to enter mistakenly omitted original budgets. So you do not use this if, let's say, come in April or June, you have an actual change to your revenue budget. You get another source of revenue, or you have to get another amended certificate. That you would not fill in this checkbox in that case. You would leave it blank and you would do everything else the same, but okay, so I'm going to save this. And if we go back to our list here, we can see that it's changed. We now have 60,000. We look at display. And notice that this column, there's nothing here under the supplemental column. If I had not filled in that checkbox, what you would see here is the full year budget amount of 58,000. Then I would have a supplemental amount here of 1,000 with a current year final budget of 59,000. You don't see that because I filled in that checkbox. But if it was a true budget, if you did get amended certificate, maybe you started out with 58,000 on your amended certificate, and then you got a second amended certificate for the year, maybe sometime in May of that year, because you found out from county auditor, hey, there was, you really should, you'll get more in taxes or whatever, another $1,000, and you have a amended certificate, or could be a variety of reasons. You get amended certificate, maybe it decreases. Then you would not fill in that applies correction checkbox when you did that supplemental change, and it would record it as a true budget change, both here and on your reports. Some of the reports will show budget changes, and it would be recorded as such, as it should be. Now, your auditors will know there are certain reports that will show that you did make a correction, but it'll be marked as such, that someone came in here and they corrected the final budget amount, but it was just a transcription correction. All right. Excuse me. So that explains most of our highlights. If we look at this last highlight, no, we haven't talked about that. All revenue budget amounts in the system for a particular fund will be marked as the fund's original budget when the permanent appropriation budgets are saved for that fund. Well, this is kind of, excuse me for a moment. About that. I said at the beginning of class I have a bit of a cold, so apparently that's affecting my voice a little bit. So I'll try to maintain, I'll mute the mic if I have another problem here. But when you enter appropriations, that's going to seal the deal for your original revenue budget. When you enter appropriation budget for this fund. At this point, you can make supplemental changes, and it would be sort of a supplemental change to your temporary revenue budget or so forth. But we'll get to that later when we get to appropriation budgets. But I had another point here I wanted to mention. Oh, yes, a point that's not in the book is that some of our UN customers have gotten in a bad habit, and so it's worth mentioning here. They've gotten in the habit of entering their appropriation budgets. They go to maintenance. They enter their appropriation budgets, which is in the next lesson, before they enter the revenue budgets, or they don't enter their appropriation budgets at all. I mean, their revenue budgets at all, because if you think of your appropriation budgets, that's your authorization to spend money. Your revenue budget, it sets the ceiling, the total amount that you can be authorized to spend. Well, in our old UN system, you could kind of get away with that if you jump through a few hoops, you could kind of get away with just entering your appropriation budget. In this version of the software, you cannot get away with it. The UN software will allow you to skip this step. Technically, it'll allow you to not enter your revenue budget, but you'll be limited by that January 1st, come back here, that January 1st unencumbered balance. So in other words, yeah, you might be able to get away with skipping the revenue budget, but when you make a payment for more than your January 1st balance, the software is going to blow up on you and say, you can't do this. You've got to budget the amount that you'll receive for the rest of the year. So really, don't even try that. You do want to enter in your revenue budgets first, and then enter in your appropriation budgets for the year. And that will keep you in good standing with the software, allow you to make the purchase orders and payments that you need to make, all things being equal, for the rest of the year. So just a little side note there. And that's all I have for revenue budgets. Now we'll move on to appropriation budgets in the next lesson.